Hi everyone, and welcome to our presentation, Elon Musk Will Not Save Us, Carbon Capitalism and Global Energy Challenges, Crises and Catastrophe in an Era of Hope. My name is Tim DiMuzio, and I'll be giving this talk. I wish I could be there with you in person, but sadly due to inclement weather, I've decided to stay home in Sydney. But I do hope you enjoy this virtual presentation. So the objective of this talk is to provide a helicopter view of our petrol market civilization in an effort to understand where we are in human history and where we might be headed. Now we know we face a twin problem, and the twin problem is the future of energy. What does a decarbonized or post-carbon order look like? How do we get there? And all those related questions. And of course, the climate emergency that we are currently embedded in and currently facing, and future generations will face with likely more ferocity and severity. So we have to keep these two twin problems in mind. Now, I can discuss a number of things, but today what I want to do is talk about three main things. The first is the growth imperative of capitalism. Why are we pursuing growth, economic growth, as an end objective? Is this a structural feature? Why aren't we pursuing something else, like the betterment of human society or making everyone happy? Like, why is our goal to always expand or grow the economy? And then the next thing I want to talk about is our reliance on fossil fuels, not only for our social reproduction, that's absolutely crucial, but for financial accumulation. So how growth is tied to fossil fuel combustion. And then last but not least, I'll ask maybe what might be called a Marxist question, or what Lenin would have said, what is to be done? And my question would be, where to from here? A little bit about the growth imperative of capitalism and why we're pursuing economic growth as pretty much a political end goal. Well, the first thing we have to recognize is this growth imperative in capitalism. Why do our economies have to keep growing so that growth becomes a panacea for all our socioeconomic ills? And doesn't matter what political party you look at, there might be some fringe parties, degrowth parties, but they're completely marginal. But most mainstream parties that have viability at the election box, they are all saying the same thing. It doesn't matter what their social policies are. Well, it does, but you know what I mean. At the end of the day, they're all pursuing economic growth as kind of a panacea for all our ills. Now, one possible hypothesis for why we're pursuing growth as kind of an end goal is that we, in brackets, want to lift people out of poverty and build wealth. Right? And there's obviously some truth to this. Over the last 100 years, if not a little bit before, we've lifted more and more people out of abject or extreme poverty. So there's some truth to that. But whether or not this is a convincing hypothesis is another question altogether. So another possible hypothesis is, why we're pursuing economic growth as an end goal is to consider the three central institutions of our times: the corporation, the state, and money. So let's start with why the political class is chasing exponential GDP on a finite planet. Anyone, would tell you this is actually madness, and we'll get to some figures that show this madness in just a moment. But nonetheless, we could say well-being, but, GDP is not a great indicator of societal well-being, right? It's an adding up exercise of all the economic transactions that go on within a nation within any 1 year. So that means more car accidents on the road. That means if we make more nuclear weapons, if we have more chemical fertilizers, so on and so forth, that gets all added up to GDP. So GDP is not a great indicator of societal well-being. That said, it is the leading indicator and the one that politicians generally follow. Another thing is that, if we don't have increasing economic growth, there's a worry that we'll have recession, or even worse, a depression, and then we have more and more unemployment, and this is not good for political stability. So it could be that economic growth is being, chased for greater political stability. The other thing, though, that I think is the real kicker is the national debt. So basically here is, the fact that if the government wants to spend more than it takes in taxes, fines, and fees, then it actually has to borrow money. And it has to borrow money on generally the private markets. Sometimes, as we've just seen in COVID, it borrows from the central bank or the Reserve Bank of Australia in our case. But basically, Here we have debt to be repaid. And it's good to have an economy that's growing over time if you have to repay debt, because the greater the economic transactions, the more tax revenue to service the state's creditors. Now, if you're curious about Australia, our net debt is expected to be $729 billion, or 34.2% of GDP at June 30th, 2022. Now, the debt to GDP ratio here isn't all that high. Many nations have higher debt to GDP ratios, but nonetheless, the fact is debt is a wonderful, wonderful mechanism for chasing further economic growth so that we can service those debts. We need to remember that economic growth over all of human history, say around 200,000 years, since the dawn of Homo sapiens, economic growth was kind of a trickle here and there, right? Sometimes big historians call it efflorescences, right? We had the rise and fall of civilizations. There was a little bit of what we might call economic growth, but it was really only when we started to use fossil fuels where we see growth go off the charts and what's called hockey sticking. So here in this graph, we can see world GDP over the last 2 millennia, and we can see that we are in an exceptional period of history. And this next chart is just to impress upon us that our national debt is growing. And again, if you have debt, you need economic growth, you need more transactions in the economy so you can raise more revenue so that you can ultimately service the interest payments on that debt. Now, I'm not necessarily saying that debt is bad. Certainly, we need government stimulus and government spending in a period of crisis, particularly during the pandemic. So it's not bad, but we have to realize that, it's not necessarily bad, but we have to realize that this is one imperative for wanting the economy to grow. We have to service the debt. Now, that's the state, right? Simplistic analysis of the state. Obviously, we're not doing state theory, but nonetheless, it's the idea that, states have national debts and they want economic growth because that helps them service the debt. Okay, so that's one way of looking at the growth imperative. The other way is to consider the corporation. Why the drive for greater profitability over time? Well, there's some kind of structural reasons for this. First, it is the fiduciary duty of corporate executives to increase shareholder value. So basically, if you're not doing this and you're a CEO of a company, you're going to get replaced. You're going to get fired. So we have to constantly be looking for new products, new markets, expansion of existing markets. We might merge and acquire with other firms to grow larger. We might engage in planned, technological, and perceived obsolescence. There are a number of tactics and strategies CEOs and executives use in order to increase shareholder value. So that's embedded in the very institution of the corporation, or I should say the limited liability corporation. Second, non-financial corporations have a lot of debt, just like the state, and this needs to be serviced. So if they're not growing, they're going to have problems servicing their debt. And I'll show you a chart on this in just a moment. And third, capitalization depends on earnings. And earnings depend on exercising power over the whole field of social reproduction. So rising share prices are generally seen with rising earnings. So again, you have this imperative to grow, to increase your profitability over time, and therefore the market value, or what is the same, capitalization of your firm. So just take any firm, for example, Amazon or Apple or whatever it might be. If their earnings are, not meeting projected realities, then ultimately what's going to happen is their capitalization will go down. Their market value will go down. And this is very, very bad for investors. And when we think about this structural logic embedded in the corporation and the fiduciary duty of corporate executives, I'm reminded by a famous quote attributed to Upton Sinclair, who said, "It is difficult to get a man to understand something when his salary depends upon his not understanding it." And I'm reminded, from this quote of Exxon's lying to us, so the largest oil company in the world, oil and gas company in the world, lying to us for at least 30 years, if not more, I think it's actually closer to 50 years, about climate change and its relation to the combustion of fossil fuels. So that's a good quote, I think, to keep in mind when we ask ourselves, well, why aren't we doing something more about this, right? Well, if a man's salary or a woman's salary depends upon not understanding the issues that we currently face, then likely not a lot is going to get done. So that's something to be aware of, I think. So what we see here is non-financial corporate business debt. So what we see over time since, look at the 1950s, there's very little corporate debt. That means the expansion of production is mostly coming from retained earnings. But since the 1970s, and certainly accelerating from the 1980s, we see corporations going into greater and greater debt. And that debt has to be serviced. And you can't service that debt if you're not growing. So again, we have this growth imperative in one of the key institutions of global capitalism, and that again is the limited liability corporation. It's structural, it's embedded. So that's an analysis or a broad overview of the two kind of major institutions of global capitalism. First, the state, and of course, increasingly important, the corporation. And the next institution I want to look at is money itself, right? It's pervasive throughout society. Generally, there's not enough of it. Some would say there's too much of it, but I think that's bullshit, and I won't be able to explain that here. But nonetheless, what we need to understand is the money supply is largely dependent on willing borrowers and a commercial bank's assessment of risk. So loans create deposits. Deposits do not create loans. So money is created. New money is produced or created when banks issue loans to willing borrowers. And again, there's some, hopefully, assessment of whether or not that borrower can repay or not, right? So some assessment of risk. So banks, rather than sovereign democratic governments, have the power to allocate the vast majority of new money. And I'll show you this in just a second. But guess how the majority of new money comes into the economy? Some of you might have got it right. It's by individuals or families taking out the largest debt that they will ever take out, likely, in their lives. That's a house mortgage or a home mortgage. And I'll show you that empirically in just a moment. Now, there is no technical or philosophical reason why commercial banks should have the power to create and allocate new money. This is a historical fact. I've covered this in Debt is Power with Richard Robbins, and I've covered that as well in an introduction to money. So if you want to read further about that, go ahead. That's awesome. But we need to realize that this system also is going to generate debt. Now, again, we have to recall that democratically elected governments must take on new debt if they want to spend more than they receive in revenue. Now, you might be asking, well, Tim, doesn't the government control money? Doesn't it produce money? Yes, it does, right? About 3% of our money is created by the government in notes and coins. The vast majority, however, is created digitally by commercial banks when they issue loans to willing borrowers. We'll see why that's important in a moment. So here it is. Here's the chart. This is housing debt in Australia. And as you can see, we're very close to about $2 trillion in household mortgage debt. And again, that debt has to be serviced, which means people have to have jobs, people have to have, relatively good income, more people maybe have to be working in the family to help service that debt, and so on and so forth. Now, here is the kicker. Now, remember I said that there's about $2 trillion outstanding in mortgage debt. Now, let's look at this next chart, and this is broad money for Australia. So it's kind of a tabulation of all the money available in Australia, and that's just over 2 trillion at 2,782 billion and some change, right? So now you can start to see how new money is entering the economy primarily through mortgage debt. And again, debt has to be serviced, and of course it is tied to interest rates, whether they be fixed or variable. So again, there's a growth imperative in our money system. Now, you might think, well, this is maybe just exclusive to, the global north or, advanced capitalist countries, but it's happening all around the world, in particular in emerging and developing economies. If you're interested in these things, if you're interested in debt, I highly recommend the Global Economic Prospects of 2020 put out by the World Bank. It's one of its flagship publications, and they looked at this, right? They looked at these waves of debt that we've gone through over the 20th and 21st century, and they say this: the current fourth wave of debt accumulation bears many similarities to the previous waves, but there are also important differences. Among these is its sheer magnitude. It is the largest, fastest, and most broad-based wave of debt accumulation yet. As a result, total debt in emerging and developing economies has risen to almost 170% of GDP. On average in 2018, a record high from 114% of GDP in 2010. So again, it's not just a first world phenomenon or a phenomenon of the global north, it's happening elsewhere as well. So again, this growth imperative is worldwide, and it has deep associations with debt. And hello, Houston, we have a problem. And the big problem is this, and no one's looking at it. Because interest is not created when loans are issued by commercial banks, there is always more debt in the system than there is the ability to repay it. Hence, also another need for economic growth. So basically, this means the greater commodification of nature and humanity, or in other words, the need for economic growth. So in sum, and I know this has been kind of a quick overview, all three institutions of global capitalism have an inbuilt growth incentive. This is structural. It's embedded in global capitalism and in our institutions. And what I want to do now is see how that's connected up with fossil fuels, as I've intimated in the very beginning of this talk. So let's talk a little bit about financial accumulation and fossil fuels. And I want to start with a quote, and this is from the United Nations Development Program's report in 2000, its World Energy Assessment. And it begins with the following: life is but a continuous process of energy conversion and transformation. The accomplishments of civilization have largely been achieved through the increasingly efficient and extensive harnessing of various forms of energy to extend human capabilities and ingenuity. Energy is similarly indispensable for continued human development and, you guessed it, economic growth. So here's the tie-in with the growth imperatives of those three central institutions we just had an overview of, and fossil fuels. Claim for you tonight is that the expansion and magnitude of financial accumulation, that is to say capitalization of earnings, or even for the state the raising of tax revenues, would have been severely restricted or constrained without the surplus energy source of fossil fuels. And the major ones are, of course, coal, oil, and natural gas. Now, if we look at a kind of a physicist definition of energy, we know that it's the capacity to do work. And therefore, if we have more energy or surplus energy, then we have surplus capacity to do work. That equals, or what we've turned that into, is more and more economic growth. Now, over time, this has also meant the greater capitalization of productive capacity. So if we go back to that earlier slide, I had global market capitalization of all listed firms noted, and that's around 93 trillion today. So if you added up the value of all the corporations, all the shares on the stock markets and their value, you'd arrive at roughly $93 trillion. And you can see here on the right side of the slide the OECD's total final consumption by energy source. Now they're being very cheeky, and this just happened maybe a few years ago, where they're adding in electricity as total final consumption. Electricity is not a source of energy, it's a carrier. So this could mean hydro, this could mean it's coming from coal. So they're being very, very cheeky here. This is in no way telling us that renewable energy is taking on oil, natural gas, and coal. And you can see that they are still the fundamental energy sources that we consume in order, of course, to pursue economic growth on a finite planet. This next chart shows us the relationship between growth and energy use. So what we can see here is as we are increasing our world energy consumption over time, economic growth is also being increased over time. So there's a key relationship between combusting fossil fuel energy and obviously economic growth here. This next chart shows us, of course, primary energy consumption by source. And we can see that oil, coal, and gas are still extremely important for the global economy. This next graph shows us the share of primary energy from fossil fuels. And we can see here that Australia is very heavily dependent on fossil fuels for their key energy source. It's about 95, if not a little bit higher, percent in Australia. Another way to consider this relationship is to consider what happened during the global pandemic. So according to BP, or British Petroleum, in 2020, oil consumption dropped for the first time since 2009 by a massive 9.1 million barrels per day. World oil production also fell for the first time since 2009 by 6.6 million barrels per day. What this means then is when we go into lockdown or shut down our economies, ultimately we're not consuming a lot of fossil fuels. So it shows this relationship between growth and our ability to use fossil fuels. And you won't be surprised to know that during the coronavirus pandemic, basically we saw a massive drop in global emissions, right? Again, because we're not combusting as many fossil fuels. And Dr. Malik from the University of Sydney, who did this study, is quoted as saying, "We are experiencing the worst economic shock since the Great Depression, while at the same time we have experienced the greatest drop in greenhouse gas emissions since the burning of fossil fuels began." And some suggest that even though this drop in CO2 emissions happened during the pandemic because of the reduced economic activity, the reduced use of fossil fuels, at the same time, it's nowhere near the cuts in emissions where we have to get to in order to have a relatively stable climate. So that's something very, very important to think about. So the problem, let's go back to the twin problems that we started with at the very beginning of this talk. Are very important to look at. That is, what does the future of energy look like? We know that continuing to combust fossil fuels is going to exacerbate the climate emergency. We're seeing that here in Australia with floods and the bushfires, or what was called Black Summer. But we also have to recognize that we only have a limited amount of oil on this planet anyhow. So we shouldn't be combusting it if we want to combat climate change. But we also have to recognize that we have roughly, and we'll see in a second, about 50 to 55 years left of oil. And that's why some geologists and other social scientists talk of this phenomenon of peak oil. That is to say, we reach the maximum amount that we'll ever produce, and then from there we have declining production. So the big question for us too then is, well, if oil will eventually become more expensive and run out, what does our civilizational order look like, and why aren't politicians doing more at this moment? So this next chart just shows us the relationship between discoveries and production and projected future discoveries of oil deposits. So, of course, people are still out there, corporations rather, are still out there searching for more and more oil. And of course, investors in oil companies get very excited when new deposits are found, because those new deposits can be assets on the books of these corporations. So ultimately, though, what this chart shows is that we've already kind of found most of the oil that has been deposited over, millennia in the Earth's crust, and future discoveries will decline. We'll find more of it, but it's estimated that we won't find as much as we have done in the 20th century. So eventually, there's going to be a gap between what we can produce and demand for oil, and then of course what we have available to sell on the market. So you can look forward to an era ultimately of high energy prices over time, or at least high oil prices over time. So that's something also to be aware of and to think about. And here we can just see, and BP does keep the best statistics on this, how much oil we have left, and they say around 50 years here. But again, because of the pandemic, it could be 55 or whatever. Still, why it matters is that over time, if there's still increasing demand for economic growth but dwindling supply, well, again, we can expect the price of oil to go up and up and up. And if you think that investors in oil and gas companies do not know that, or are not thinking forward about their future profits, you'd be wrong. And while we can't get into it in intimate detail tonight, we also have to understand the connection between oil and gas and, of course, conflict or war. And this was really driven home to the lead climate scientist of Ukraine when she was trying to wrap up with her team the results for this new publication from the Intergovernmental Panel on Climate Change. And she said, I started to think about the parallels between climate change and this war, and it's clear that the roots of both these threats to humanity are found in fossil fuels. Burning oil, gas, and coal is causing warming and impacts we need to adapt to. And Russia sells these resources and uses the money to buy weapons. Other countries are dependent upon these fossil fuels. They don't make themselves free of them. This is a fossil fuel war. It's clear we cannot continue to live this way. It will destroy our civilization. So again, this intimate connection between fossil fuels and what's going on presently in the Ukraine. Okay, so in sum so far, we've analyzed the kind of growth imperative of modern capitalism, or global capitalism if you like, and then we've connected that up with our use of fossil fuels, and we've seen how the use of fossil fuels, or the combustion of fossil fuels, has undergirded that massive spike in economic growth throughout the 20th and into the 21st century. But again, we know that if we keep combusting these fuels, we're going to exacerbate the climate emergency. We're going to likely ruin our biosphere. We're going to see more species extinctions and all the other calamities that come with global climate change that I'm sure that you're already well aware of. So the next kind of question we could ask is, well, what is to be done? And it's very, very complex, right? We have a lot to do, which actually makes the world kind of interesting, right? We have a task. We have something to do. We have to battle these two problems. So the question we might want to ask is, where to from here? And I would suggest there are no easy answers or quick fixes. This is a political problem. It's not an individual problem. Now, the first kind of attempt a solution to these twin problems of energy and climate is what's called a technoscientific fix. And this is the general belief that innovation and technology can overcome the climate emergency and allow us to continue pursuing economic growth in perpetuity. And that's a huge, huge question. This whole idea of having faith in technology and markets. And of course, it's what more or less the coalition believes, certainly Scott Morrison. So this means, reducing vehicle emission or increasing, vehicle emission standards, energy efficiency obligations for buildings and homes, rules on the use of carbon credits, subsidizing renewable energy, replacing the automobile fleet with electric cars, etc., right, etc., etc. In short, this belief in the technoscientific fix suggests that the right mixture of government policy and market magic of corporations, can get us over these two twin problems, the problems of energy and the problems of the environment. Now, I suggest to you that this is probably not a good solution to the crisis or problems that we currently face. And one of the major reasons for this is that people often say, well, we can just turn to renewable energy and continue, this scale and scope of the global economy as though we were using fossil fuels. And I think this is kind of, it's dreaming, really. And I think it's dangerous to dream in those terms. There's a number of reasons why renewables necessarily can't save us. One of the major reasons is that it's still involved in what's called extractivism. That is to say that even though we think of renewables as clean and green, it's really not. All those materials come from, extracting resources, and that is a high energy intensive process. And guess what we're using to actually do that extractivism? It's fossil fuels. there are other reasons to be concerned, such as some minerals just are, non-renewable. That is to say, once we use them, we generally can't get them back. And here I suggest that you watch The Planet of Humans if you haven't already seen it. It's free, it's up on YouTube, and it explores these major problems that I've been discussing tonight. So again, we have to be concerned with renewables. I'm not saying we shouldn't try our best to adopt more and more renewable energy. I think we should. But is it a solution to our problem, or is it a panacea to those twin issues of future energy provisioning and then also global climate change? And I think there's reasons to be, skeptical, and here are some of them. So it's reliability, scalability. Sometimes we're converting fertile land where we can grow food to wind farms or to produce biofuels. So that takes food out of people's mouths potentially. And then there's negligible energy return on energy invested. So if you're extracting energy and you're putting in 10 units to get out 11, that's not a very good exchange, right? So we have to think about that. Anyways, there's a number of other things to consider here. Here's the list, and if you want to pause the video here and kind of read through them all, you can. But it just suggests that we have to be skeptical about renewable energy being a panacea for our ills. I don't think we can have the same level of growth with renewable energy as we've had with fossil fuels. And maybe ultimately that's a good thing. So I'm not saying that technology doesn't have a role to play. Of course it does have a role to play. But I don't think we should fetishize technology as kind of the savior for the embedded nature of our petrol market civilization, our reliance on fossil fuels. Now, ultimately, if we can't look at techno fixes or don't have complete faith in them, then there's sociopolitical approaches that we can consider to, again, these twin problems of the climate emergency and future energy provisioning. Now, one hopeful sign, and this is actually why, in part in the title of this talk, I say in the new era of hope. And one kind of promising sign is the fossil-free campaign. Now, this emerged on U.S. college campuses and since internationalized, right? The University of Oxford has claimed that it is the fastest growing divestment campaign, and that's in comparison to the divestment campaigns in South Africa and, of course, the divestment campaigns over big tobacco. Now, there are three demands made by these organizations, and that is a fast and just transition to clean, renewable energy. 2, a ban on any further development of coal, oil, and gas projects. And 3, divest, desponsor, and defund dirty energy projects. Now, according to the organization, Fossil Free, they have won over 1,000 commitments worth nearly $8 trillion from institutions ranging from universities and banks to the world's largest sovereign wealth funds and major capital cities. So again, that's pretty promising. I think this is one reason to be hopeful. And I think the other thing that we can think about when we think about hope is that your generation, and probably other generations as well, but your generation in particular, is aware of these problems. You're going to have to confront this throughout your lifespan, so are your children and your grandchildren. So we need to think about these issues in a very serious way and start to look for solutions for how we might live in a decarbonized or post-growth social order. And I think that can be done, and I'm not going to address it here, but it's not all doom and gloom. Remember, if we see a problem, we have to be solution orientated. It's one thing to disparage everything, go everything's fucked. It's another to go, okay, well, these are our problems. Let's get politically active. Let's get mobilized. Let's do something, about them. And again, as Foucault would suggest, it's not that everything is bad. It's that everything is potentially dangerous. And if everything is dangerous, that means we always have something to do. And that makes life worth living. That makes life very, very interesting. So that's all well and good. And I am thankful for that campaign. But there's a big problem. Fossil fuels aren't just energy. They don't just represent energy, right? Basically, at the base, they are also assets, right? They are one of the world's largest, if not the largest, asset classes. And there is a number of factors why this is really important to consider. And the first is the scale of the market. So everyone uses oil, and oil pretty much goes into everything, not just, your petrol tank. Liquidity, so a lot of traders are trading it so you can get your money in and out if you invest. Growth over time, so again, as energy prices become, or oil prices become more expensive, investors will reap the profits of that, right? And that leads to a greater yield or return on your investment. So the incentive structure, right, whilst the fossil free campaign is doing the good work of trying to get corporations and cities to divest from fossil fuel companies, that's not stopping other investors from continuing to invest in oil and gas corporations. So again, it's we see hopeful signs, but we also have to be very skeptical or critical of the fact that fossil fuels really are an important asset class for investors, and there is a lot of money to be made over time off them. Now, this next chart is a juxtaposition between the capitalization or market value of the oil and gas industry and the renewable energy industry as captured by the Wilder Hill Next capitalization. So it's a basket of renewable energy companies that they track. And basically what we're going to see here is that oil and gas is still more favored by investors than renewable energy. So the oil and gas industry's capitalization during this period under study, it increased. So its share values of these companies, right, like Exxon and BP and Shell, increased by over 127%. So again, there's your return on investment. Compare that to the Standard & Poor's index, which offers us roughly, if you average it out over around 30 years, a 7% return, right? So if you're heavily invested in oil and gas companies, you've made 127%. So you've beat the market by a different order of magnitude. And had you invest in renewable energy throughout this period, you would have lost 29% of your money, right? So this is just to really show us that we need to be looking at where investors are actually putting their money. So it's one thing to look at discourse and media and to think about, these airy-fairy ideas of, the green economy or the Green New Deal and so on and so forth. We need to do what any good investigators do, is follow the money. And the money is showing us that investors are still very much interested in oil and gas corporations, and they will do so over time as oil prices increase throughout the rest of this century, as I presume them to do. At the top of this talk, that I'd come back to GDP and demonstrate why perpetual growth on a finite planet is pretty much impossible, right? Now, it's also a measure, though. We can use GDP as a proxy for greater commodification, right? So we're commodifying nature and humans and so on in order to achieve this growth. Now, let's just put this in context. Consider that GDP stood at 86 trillion in 2018, so just before, about 2 years before the pandemic. Now, if we think about the future of carbon capitalism and project a modest growth rate of 3% to the global economy, okay, so 3% growth, right? This means that by 2100, global GDP will have to be US 904 trillion, okay? So the key question is whether this is at all possible and what the natural and social world will look like at that rate of monetizing and commodifying nature and social relations. It seems completely impossible and would likely lead to the complete ruination of the biosphere. So I know there's a lot to discuss and a lot that I haven't covered in this talk, but I hope you found it informative, and I'd like to end with kind of a brief conclusion. What I think we can see, if we take again that bird's eye view or helicopter view of our global economy, is that there are three predominant tendencies that have shaped what I would call carbon capitalism. And of course, that's one of my books, some of you might know. The first is we're producing money as debt. We don't create interest when banks loan money, so therefore it leads to the greater pursuit of economic growth to service those debts, and that we saw at the state level, at the corporate level. I didn't examine the individual level, although I did mention mortgages, right? So very, very important for, how we produce money and what we allocate that money for. So that's a huge field and deep question that we can examine maybe another time in a different talk. The other thing that I think is apparent is we rely on non-renewable fossil fuels for financial accumulation and growth. This is apparent. We saw that in the BP example, in the pandemic, where they're quoting the pandemic and saying, well, look, oil's down, we haven't been consuming a lot of it, and therefore growth is down, and so on. So there's that deep connection between economic growth and financial accumulation and the use of fossil fuels. And then, of course, we have the greater capitalization and commodification of life and greater CO2 emissions over time as a consequence of our pursuit of economic growth. So we have some, big opportunities and challenges. And the first is we can choose mounting debt crises and austerity or some type of monetary form. And a lot of people are working on this, right? The movement for sovereign money, or democratic money, sometimes it's called. So one of the things that we have to change is this debt-based economic system. At least that's one of the ways I think we should think about it. And then we could choose runaway climate change and expensive carbon energy, in particular oil. Or we can start shifting to low carbon-based social reproduction, and there's some key questions here. Well, how do we achieve a renewable energy lock-in? So we've faced carbon lock-in over the last at least 300 years if we begin in Britain and start with coal. So how do we get renewable energy to kind of lock in, and then what does our civilizational order look like? So what does a low carbon economy look like? And can we achieve degrowth, right? Could that be something that we pursue, and what would our lives and lifestyles look like in an economy that's not growing, right? So again, these are deep, deep questions we really need to think about, and we don't have very, very clear answers for it, or at least I don't think we do. So again, a lot to do and a lot to discuss. And then we could choose the greater destruction of nature and human life for profit, which is basically what we're doing, or alternative indicators and ways of life rather than the pursuit of endless growth and capitalization. So what indicators might we find that would better or enhance human security on this fragile and finite planet? I really hope you enjoyed this talk. I know it's kind of just a helicopter view of our current situation, but I hope it helps you understand where we are and where we might be going. Again, there's a lot to discuss, a lot to consider, and I've only been able to do a sliver with you tonight. I'm really sorry I couldn't be there with you. I was really looking forward to it, but hopefully WUDFA will have me back, and I'd like to thank their executive for inviting me to talk. And again, I'm not a huge videographer. I'm doing the best I can, so hopefully you enjoyed it, and hopefully there's some fruitful discussion afterwards. Take care, everyone.